Hello and welcome to this webinar, CFA Level I Fixed Income. This webinar deals with the following readings. First of all, fixed income securities defining elements. This one will talk about the structure of a bond's cash flow, so the principal repayment structures. Then, of course, it's about the bonds with contingency provisions like callable bonds, like puttable bonds, and convertible bonds. Next chapter that's included in this webinar, because it's included in the CFA Level I exam, is fixed income markets, issuance, trading, and funding. Like we need to think about primary and secondary markets. We need to talk about the sovereign bonds and the non-sovereign bonds, the corporate bonds. So we need to understand the fixed rate bonds, the floating rate bonds, and the inflation-linked bonds. Then, of course, introduction to fixed income valuation, like bond prices and the time value of money. We need to think about the yield to maturity, and we need to talk about the four different effects like inverse effect, convexity effect, coupon effect, and maturity effect. Then, of course, it's about the introduction to asset-backed securities. You need to think about the benefits and risks of securitization. You need to understand the details about, like, for example, auto loan asset-backed securities and the credit card receivable asset-backed securities. Then, of course, next reading, the understanding fixed income risk and return. There's different sources of return. There's the receipt of the promised coupon and principal payments. There's the reinvestment of coupon payments, and there is the potential gains or losses on the sale of the bond prior to maturity. And there's very many computations included in this reading because of the very many types of duration, like Macaulay duration, for example. And you need to see the difference between the duration and the convexity adjustment. Then, of course, fundamentals of credit analysis, including, but not restricted to, the credit risk, default risks and loss severity, and the 4 C's. The 4 C's of credit analysis, like capacity, collateral, covenants, and last but not least, character. See you then.